Welcome back to our channel, where we empower you to take control of your financial future. In today's video, we'll be sharing 10 essential personal finance tips for beginners. Whether you're just starting your journey to financial freedom or looking to refine your money management skills, these tips will set you on the path to success. So let's dive right in. Tip number 1. Create a budget. A budget is the foundation of good financial management. Start by tracking your income and expenses, and allocate your money wisely to cover your needs, wants, and savings goals. By having a budget, you gain a clear understanding of where your money is going and can make adjustments as needed. For example, you might realize that you're spending a significant portion of your income on dining out or entertainment. By identifying these areas, you can make conscious choices to reduce expenses in those categories and allocate the money towards more important goals, such as saving for a down payment or paying off debt. Tip number 2. Establish an emergency fund. Life is full of unexpected surprises, and having an emergency fund can be a game changer. Aim to save at least 3 to 6 months' worth of living expenses in a separate account. This will provide a safety net during challenging times and prevent you from falling into debt. Imagine facing an unexpected medical expense or losing your job without any savings to fall back on. An emergency fund gives you the financial cushion to handle these situations with confidence and peace of mind. Tip number 3. Prioritize debt repayment. If you have outstanding debts, make it a priority to pay them off. Start by tackling high-interest debts first, such as credit cards or personal loans. Consider strategies like the debt snowball or debt avalanche method to accelerate your progress towards debt freedom. For example, with the debt snowball method, you focus on paying off the smallest debt first while making minimum payments on other debts. As you eliminate each debt, you gain momentum and motivation to tackle larger debts. Additionally, explore options for consolidating your debts or negotiating lower interest rates. The sooner you become debt-free, the more money you'll have to allocate towards your financial goals. Tip number 4. Save for retirement. It's never too early to start saving for retirement. Take advantage of employer-sponsored retirement plans like 401ks, especially if they offer matching contributions. If not, open an individual retirement account, IRA, and consistently contribute to it. By starting early and harnessing the power of compound interest, you give your retirement savings a significant boost. For instance, let's say you start investing $200 per month in a retirement account at age 25. Assuming an average annual return of 7%, by the time you reach age 65, you would have accumulated over $600,000. However, if you wait until age 35 to start, your savings would only amount to around $300,000. Remember, the earlier you start, the more time your investments have to grow. Tip number 5. Automate your savings. Make saving effortless by setting up automatic transfers from your checking account to your savings or investment accounts. By automating your savings, you ensure that a portion of your income is consistently being put aside for your future. This not only helps you build wealth over time but also removes the temptation to spend the money elsewhere. Start small if you need to and gradually increase the amount you save as your income grows. For example, you can set up a recurring transfer of $100 per paycheck to a high-yield savings account or an investment account. Over time, this consistent saving habit will accumulate into a substantial sum. Tip number 6. Educate yourself about investing. Investing can help your money grow over time, but it's essential to understand the basics before diving in. Learn about different investment options, such as stocks, bonds, mutual funds, and real estate. Understand the concept of risk and return and how to build a diversified portfolio. Consider seeking guidance from a financial advisor to help you make informed investment decisions that align with your risk tolerance and long-term goals. For example, you can start by learning about index funds, which provide broad market exposure at a low cost. By investing in a diversified portfolio, you can potentially earn higher returns and mitigate risk compared to investing in individual stocks. Tip number 7. Protect yourself with insurance. Unexpected events like accidents, illnesses, or natural disasters can have a significant impact on your finances. Ensure you have adequate insurance coverage, including health insurance, auto insurance, and home or renter's insurance. While insurance premiums may seem like an additional expense, they offer valuable protection against financial hardships that could otherwise set you back. For instance, imagine being involved in a car accident without insurance. The costs of medical bills, property damage, and legal fees could be financially devastating. It's a small cost compared to the potential financial burdens it can protect you from. Tip number 8. Live within your means. Avoid the trap of excessive spending and lifestyle inflation. While it's fine to treat yourself occasionally, make sure your expenses align with your income and financial goals. Practice mindful spending by differentiating between needs and wants. Consider creating a spending plan that includes a set amount for discretionary expenses while still prioritizing your savings and debt repayment goals. For example, you can allocate a specific budget for dining out or entertainment each month. By consciously monitoring and limiting your discretionary spending, you can maintain a balanced financial lifestyle and avoid unnecessary debt. Tip number 9. Increase your financial literacy. The more you know about personal finance, the better equipped you'll be to make informed decisions. Read books, listen to podcasts, follow credible financial experts, and join online communities to expand your knowledge. Topics to explore include budgeting, investing, taxes, credit, and retirement planning. For instance, you can read books like The Intelligent Investor by Benjamin Graham or Rich Dad Poor Dad by Robert Kiyosaki. Remember, financial education is a lifelong journey, and staying informed will help you navigate the ever-changing landscape of personal finance. Tip number 10. Set financial goals. Without clear goals, it's challenging to stay motivated and focused. Define both short-term and long-term financial goals, such as paying off debt, saving for a down payment, or starting your own business. Break them down into actionable steps, and create a timeline for achieving each goal. Celebrate your achievements along the way to keep your motivation high. By setting financial goals, you give yourself a roadmap to success and a sense of purpose in your financial journey. For example, if your goal is to save for a down payment on a house, break it down into smaller milestones such as saving a specific amount each month or reducing certain expenses to accelerate your savings. Remember, building a strong financial foundation takes time and effort, but the rewards are worth it. Implement these tips, stay disciplined, and watch your financial future flourish. If you found this video helpful, give it a thumbs up and subscribe to our channel for more valuable content. Don't forget to hit the notification bell, so you never miss an update.